Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.com/subscribe. Let's dive right in. In today's episode, we'll cover the market's strong start and close in the red, increased consumer confidence and retail sales, Micron's rising stock and potential mergers, the importance of retirement planning regardless of age, and the concept of value investing, according to Seth Klarman.
We've got some good news on consumer confidence. It jumped nearly 10% in December, reaching a whopping 110.7. This is the second consecutive month of gains, following last month's revised figure of 101.0. It's higher than the estimated figure of 104.5, making it the biggest surge since early 2021. What does this mean? Well, it indicates that consumers are back and more excited than ever. The holiday season definitely played a major role in boosting these figures. On top of that, retail sales rose 0.3% in November compared to October, when sales had fallen 0.2%. It looks like December is expected to continue the upward trend due to increased interest in buying. Consumer spending is a big deal, accounting for about 70% of the country's economic activity. A major decline in consumer spending can have a significant impact on various sectors and the country's GDP. Now let's talk about some other positive news. Americans are gaining confidence in the economy, and expectations of a recession have hit their lowest level this year. However, around 2/3 of Americans still see the possibility of a downturn next year. Expectations for income, the labor market, and business are looking up, with a rise from 77.4 in October to 85.6 in December. Keep in mind, a reading below 80 for future expectations historically signals a recession within a year. Speaking of the labor market, sentiment is looking impressive. The number of consumers who believe jobs are plentiful hit a 5-month high. There are a couple of factors contributing to this positive trend. Falling energy prices and lowering interest rates have played key roles in keeping people happy. Let's quickly touch on some global news as well. 1. Airbnb admitted to misleading Australian customers by charging them in USD instead of the local currency. 2. Toyota's Daihatsu is putting a halt on all vehicle shipments as a safety scandal widens. 3. Boeing got the green light from China's aviation regulator for 737 MAX deliveries. That's great news for them. Oh, and here's a surprise. U.S. oil production has hit an all-time high of 13.3 million barrels per day. Additionally, in 2022, we saw the lowest total unemployment rate ever. I have some exciting news for you about Micron. Their stock is on the rise, up 78% pre-market, thanks to their stellar earnings report for the first quarter of fiscal year 2024. They really knocked it out of the park. Analysts were expecting Micron to report a loss of $1 per share, but they surprised everyone with a better-than-expected earnings per share of $0.95. Not only that, but their revenues of $4.73 billion also surpassed the consensus estimates of $4.58 billion. What a win for Micron! Looking ahead, Micron is predicting an adjusted loss of 28 cents a share on sales of $5.3 billion for the current quarter. This forecast is based on the midpoint of their outlook. It's worth mentioning that Wall Street had been anticipating a larger loss of 62 cents a share on sales of $4.97 billion for Micron's fiscal second quarter. But here's the exciting part. Micron's management team is confident that the company will return to profitability next year, despite the challenges they faced during the pandemic and supply-related issues. Investors have shown immense faith in Micron, but now they're eager to see that faith rewarded with profits. While Micron shares have kept up with the broader semiconductor industry's ETF, $SOX, their overall return has lagged behind other time frames. Something to keep in mind. In other news, the stock market closed in the red yesterday for no major reason, indicating that investors might be starting to take their profits and walk away. Plus, there are reports of leadership changes at Alibaba, following their bruising encounter with a successful rival. Oh, and let's not forget the talks of a potential merger between Warner Bros. Discovery and Paramount Global. Retirement planning is something that we all need to prioritize, regardless of our stage in life. Even if retirement is not on your immediate radar, it's important to start planning now. Just take a look at successful entrepreneurs like Warren Buffett who engage in retirement planning, despite not intending to retire anytime soon. The sad reality is that most people don't plan effectively for retirement, and as a result, end up without enough money. But you can avoid being part of that statistic. Instead, ask yourself a few key questions to get started. Firstly, determine how much you'll need to retire. Don't base this on averages or what others are saving. Consider the type of life you want to live after retiring and use that as a basis to calculate your retirement savings goals. Next, decide when you want to retire. While traditionally people retire in their 50s, an increasing number are opting for earlier retirement or continuing to work past their 60s. Once you have a clear idea of your retirement needs and timeline, figure out how much you need to save each month to reach your goals. Remember, it's better to start saving something rather than nothing. Even a modest monthly contribution of $100 can grow to $12,000 by the end of the year. And don't forget, you can increase this amount by investing wisely. When it comes to saving for retirement, consider investing in a 401(k) or similar account if your employer offers it. Start contributing as much as you can and gradually increase your contributions towards the IRS limit, which currently stands at $22,500 or $30,000 for those age 50 or older. Additionally, be mindful of the investment options within your retirement account. Index funds and precious metals are generally safer and less volatile than stocks and digital coins. Remember, spending time on your retirement plan within your overall financial plan is crucial. It will impact your happiness in later years and determine what you're able to do. So don't put off retirement planning any longer. Start now and secure a brighter future for yourself. Today's quote of the day comes from none other than Seth Klarman. He said, "Value investing is at its core the marriage of a contrarian streak and a calculator." So let's break it down, shall we? Value investing, my friends, is all about seeking out those hidden gems in the market, those undervalued stocks or assets that everyone else seems to overlook. And what makes value investing so intriguing is that it requires a bit of a contrarian streak. Going against the grain, swimming against the current. It's about having the courage to invest in something when everyone else is running away from it. But it's not just about being a rebellious investor. Oh no. Mr. Klarman emphasizes the importance of a calculator. You see, value investing is not just about blindly following your gut instincts. It's about doing the math, crunching the numbers, and making informed decisions based on solid analysis. It's about being rational in a world sometimes ruled by emotions. So, my friends, let's embrace our inner contrarians and let our calculators guide us on this exciting journey of value investing. Who knows? We might just stumble upon the next great investment opportunity.
In this episode, we covered a range of topics, including the market closing in the red despite a strong start, increased consumer confidence and retail sales growth, Micron's impressive stock performance and earnings, the importance of retirement planning, and the wisdom of value investing, according to Seth Klarman. Thanks for tuning into the Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.